Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Another question, Mike. Another attendee says, isn't it true that you can create calendars that do have a bias? You know, normally people would look at a calendar and say that's a neutral trade. As you pointed out, the 69 calendar when EUI is trading at 69 is pretty much a neutral trade. But if I had done the 66 calendar or the 72 calendar, isn't it true that, you know, if I go out a couple months, I'm going to have a bias, an actual directional bias, correct? So you can do that with calendars?
Absolutely, because if you were to do the 73 calendar, then with that, what you're doing is your dream strike price, so to speak, is no longer 69 at expiration. Your dream strike price would be 72 or 73 or whatever strike price that you sold that calendar at. So since that's your new dream strike, then that makes it a bullish trade. It becomes a bearish trade, obviously, if you're going a little bit in the money from that standpoint, to where that would be your dream strike price, if you will. So it's just all based upon you want the stock to go to that specific strike price. And that's assuming you're not doing some type of a volatility trade or things of that nature.
Right. I mean, we're just trying to stay straightforward here. Guys, we don't want to take too much of Mike's time, but if you have any other questions, please type them in the chat box. Mike, can you just go back through, you know, how people can contact you?
Yeah, absolutely. The way with which we can do it, and are you seeing the screen up right now, the About Us screen?
And your services, you said you do hedging. You know,
yeah,
obviously.
Are you seeing the right screen right now for the?
It's About Us. I think there was one slide back.
Yeah, what we do, just a little bit about us.
We do, yep. Go ahead.
Yep. We do managed trading, so if you are interested in investing, we do believe in hedging in the long-term portfolio, and we do it with options, assuming it's appropriate for the specific client. We're not afraid of doing it. We understand options. We know your options, so to speak, hence the name. We do have self-directed trading from the standpoint to where if you want to do a self-directed trading account, you can do it through our branch. The platform is 99% identical to the Options Express platform, but if you want advice, you can call in, and we're happy to help you. If you do want to do some business hedging, you can do so from the standpoint that if you have overseas positions, we can do that with FX options. We're more than happy to help you with that. And we also offer insurance on life, disability, and long-term care, depending on the state from which you are listening.
That's great. And they can get a hold of you at the website or via phone. Let me go back slide.
Yep.
Best to contact you via email?
Yeah, contact us via email or the phone number. So the other thing that you can do, we offer something called a portfolio review. And if you'd like to go over any positions that you have or that you're considering, go to the knowyouroptionsinc.com and click on the stopwatch. And within there, you can request a portfolio review. We'll contact you, and we'll talk bulls and bears on anything that you'd like.
Oh, that's neat. That's neat. So, but what are you doing there? You're basically trying to look at generally if somebody has too much invested in one security?
In general, we have what we try and do, the way with which our process works is that we believe in the first principle of our business, so to speak, is being honest with the client. And that's step one. The client's going to know what's going on. The client's going to trust us. Step two is making sure the client understands what he or she is getting into before any trade. And then step three, and this is actually the third priority, we're going to try and do our best to make money for the client, and that's our third priority. With that, we make money based upon risk management from the standpoint that we believe that protecting assets comes before making money, but we put that within the premise of making money. So that's kind of our philosophy on things, and that's why we believe in hedging, and that's why we use the FX currency options, because if you're at risk from the currency, we want to put you in a position to where it's not going to harm you over the longer course of time.
So, Mike, I don't know if this is true or not, so I'm just going to ask you. So do you guys believe more in absolute returns or more in relative returns, or, are you somewhere in between?
I would say somewhere in between. The bottom line of what we believe in is we want to protect the assets, because a lot of times what drives me nuts is a lot of people are saying, oh, I'm having a great year this year. I'm up 13% on the year or whatever. But if you were down 50% last year, then that's something to where the 16% doesn't seem quite as much of a good thing, so to speak.
Right.
So
Everything is in context. Understood. But
right.
Options allow you to hedge. I mean, I think that's your whole business, is that, if you understand options, then, there are lots of avenues available for investors.
Absolutely. And in the long-term portfolio, we have no qualms about buying puts for people when it makes sense. In terms of like relative versus absolute returns, to kind of expand on that, what we try and measure the rate of return in someone's portfolio, we might not match the market, but based upon the client's needs, if they're totally hedged and we miss what the S&P does by 1% or 2%, then that's something that we're actually really proud of. However, if a client were to make 50% one year, but they just got lucky buying some out-of-the-money call options, we wouldn't view that as being a very responsible broker or financial advisor. So it's relative from the standpoint that options aren't free, and there's give and take to everything, but protecting assets is the number one goal as to how we try to make people money over the longer course of time.
We all work really hard to get our assets, and then, unfortunately, I guess most of us last year, we believe that if you had diversification, then you'd have been fine. And as it turned out, diversification didn't help last year. The only thing that really did help was portfolio hedging. So, hence your business.
Yeah, that's pretty much how we're looking at it. And the other thing is, what is diversification if 100% of everything is in U.S. stocks?
That's a good point.
Because if someone's in London and they make their money in pounds and the dollar tanks against the pound, then their U.S. stocks aren't going to be a very happy investment for them.
Correct.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.